tutorial today. My name is Edmund. Basically, you know me as Head of Education for FXPRIMUS Academy. But basically, today's video is actually on the markets itself. A lot of people are worried that the coronavirus issues have impacted the financial markets to an extent that they are unable to trade or invest anymore. However, I view the coronavirus as just another headline in the market, pretty much similar to what happened with the US-China trade war headline, what happened to the Brexit headline, what happens with the US and Iran headline, and of course even the recent OPEC, Saudi Arabia versus Russia headline. Okay, to me, all these news and headlines provides volatility to the markets, and to be frank, as a trader, the bigger the news, the better the clarity in the market and the better the chance for trading. Okay, so shortly I will move to my charts just to show you how I analyze the markets like 1 year ago, 2 years ago, until yesterday or even last week. Okay, it is pretty much the same style because I'm using an intraday style to analyze the markets and the sentiment, whether it's bullish or bearish. And also within the intraday time frame of 24 hours, I break the market down into 3 smaller cycles. One is in the morning, the Asian market cycle, which is Singapore time from 7 to 9 a.m. Second major cycle will be towards the afternoon, local Singapore time 2 p.m. until 4 p.m. And the third cycle is local Singapore time 7 p.m. to 9 p.m. In other words, when you break down the markets into smaller cycles, even the largest of bad news or small news, it will actually influence, for example, the price of gold or even the pound dollar to move in one direction for at least 1 to 4 hours. Okay, so that movement of 1 to 4 hours will generate easily for currencies, especially for the pound recently, easily between 100 to 200 pips within 1 to 4 hours. Okay, and of course, for gold prices, it will easily move the gold prices between 20 to 30 US dollars. So in other words, since the spot market and forex market, we are able to long or buy when it's going up, we are also able to sell or short when it's coming down. It provides us a lot of flexibility. And to me, having this kind of headline news, such as the coronavirus or even other major headline news, it provides the catalyst or the fuel for the prices to move even in a larger range. Okay, so as long as you understand the market's support, resistance, and the sentiment, whether it was bullish or bearish, look at the markets, analyze it. The timing comes, the volume will definitely appear, and you will definitely take a trade according to what the market is telling you. Okay, in short, you want to take a trade in the shorter cycles, number one. Number two, due to the news, the volatility and the momentum and movement is even clearer. Okay, so we will take the trade with the latest sentiment, with the latest news, and also with the latest chart patterns that we are looking just before we enter buy or sell. Okay, so let us have a look at the charts at the moment. Okay, so guys, as I mentioned before, the style of trading that I use, whether it was like 5 years ago, 2 years ago, or even as recent as last week, has been the same. Okay, this means that whenever there's news, there will be movement and volatility. The larger the news, whether it's on the virus or whether it's on US and China trade war, or whether it's on the recent OPEC, Saudi Arabia and Russia crisis, definitely the movement will be there. Okay, so what we're looking at here is the pound dollar. Currently is trading at 1.2820. What we see here is as recent as the 2nd of March until the 4th of March, the pound dollar is trading in a sideways range. Okay, however, as you can see, it starts to break up. Okay, and a lot of these moments, you notice the timing of the breakup, such as this one. This one happens at 1300 hours plus 6 during that time. This is 7 p.m. local Singapore time. Market starts to bounce up. Okay, not only did it bounce up, at further down the line, it broke through this resistance and it shot all the way up, bouncing on this trend line. Okay, all the way to a high of 1.3200. Okay, so within that short term of 2 to 3 hours, it moved up 60 pips in the afternoon session, and towards the evening, it bounced up another 60 pips. Okay, so altogether, we had 120 pips movement on 4th of March, and moving on towards the 5th of March, again, you see the markets being quiet. However, as the volume is forming, and when you put your mouse here on this candle, this is 1600 hours local Singapore time, it's 4 p.m. Okay, so this is without daylight saving. So 3 to 5 p.m. is the time frame for movement, and again we see the volume rising and the price punching up, initially 57 pips, and by the end of the evening it moved up 100 pips. Okay, so on 5th of March we had another 100 pips of movement, which you can analyze and easily go for a buy trade. Okay, move on to Wednesday. Again, volume rises again. This time it's at 2 p.m. Local Singapore time, and it punches up another 80 pips. Okay, so this pattern happens every day, and this particular tip at the top, a high of 1.3200 was actually, if you look at the daily chart, was actually this high. Okay, this particular high. So on the daily chart, we can see that it's going up for 1 day, 2 days, 3 days, 4 days, 5 days straight. And of course, back to the hourly chart, we also can see that the pound dollar has been bouncing up 1, 2, 3, 4, 5, 6 times. Okay, in other words, markets will not always touch this uptrend line and keep on bouncing up forever, correct? So after it has bounced up 5 or 6 times, it has exhausted or almost exhausted its upward bullish energy. And of course, this tip here is also on the daily charts high. Okay, so what do you expect will happen? In other words, on the 10th of March, when volume is rising, in the morning session, the Asian session market, this is at about 6 a.m., it starts to break this uptrend line. Okay, so what this means is there's a tendency for it to drop. Okay, all the way until the afternoon session, we can see that at 2 p.m. it punches down, and towards the US market session, it actually punches down even further. Okay, so when you analyze it in the small cycles, you can actually catch the small sentiments, whether it was bearish in the morning, slightly bullish in the afternoon, and again bearish in the evening. Okay, so on 10th of March, it broke down 170 pips. So it goes all the way to the current price of 1.2820. It's pretty much the same for the euro dollar. Again, you see the euro dollar ranging, and then it starts to break up. Okay, so when you draw your trend lines, okay, let's say you just draw it as simple as this, connecting this point to this point, okay, this point to this point. Of course, when you extend the ray, it goes all the way to support the next bounce here and here, okay, and towards the upside, before the markets chose to go down or go up, you can see that it has been finding resistance, okay, horizontal resistance. So we know that it's broken up, it's on the uptrend, but however, it's starting to find resistance. And this doesn't happen in a minute or two. This is happening for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours. Okay, so if it doesn't go up, where does it go? With the volume coming, you analyze the morning session, it's breaking down. So your general direction will be downwards. And again, it starts to break down. Okay, so these are the ways that we analyze the market, or how I analyze the market for the last couple of years, until today, until last week, until the previous month. Okay, what I'm trying to send the main message out is to trade the markets, whether it's with this current economic situation or 1 month ago or 1 year ago. You just have to trade in a slightly different way, analyze the markets on shorter time cycles, such as the 1 hour charts. And within the 1 hour charts, analyze the 3 specific time zones. Again, Singapore time, morning 7 to 9 a.m., afternoon session 2 to 4 p.m., and also evening session 7 to 9. Okay, so these times are actually great for trading. Even yesterday, this was the gold price. So gold found some resistance at this price of 1667, and just at this time, this was at 9 p.m. yesterday. Okay, gold prices dropped from 1,665 all the way down to 1,633. So again, if you understand the market sentiment and behavior, having major news, whether it's the virus or the US-China trade war or even the OPEC issue, having all these major news actually helps in the trading, okay? Because when there's major news, there's more volume, there's more volatility, there's more participation. And when that comes, when that happens, it means that the push and the momentum or the energy to move it more pips in one direction is even clearer. Okay guys, aside from trading, I hope that this coronavirus episode will help us become more responsible human beings. Responsible in the sense that if we notice any symptoms such as fevers or sore throats, make sure you avoid going to the office or avoid places with large crowds. and of course, go to your nearest medical facility to get yourself checked out. So that's very important. And of course, don't hoard all the goods or even masks. In fact, if you see any friends or relatives who seem to be coughing, we should be offering them a mask rather than taking on a mask for ourselves. Okay, same goes for what happens after this coronavirus issue has ended. Make sure we have learned the lesson and become more responsible consumers every single day in our daily decisions on what we consume, what we use, and how we treat the environment. Okay, so I hope that you guys have a good understanding of the markets and trading moving ahead. And of course, I'll see you guys soon for the next market updates. Thank you very much.